Mitesh Thacker joins in with his thoughts on the market. Mitesh, extremely range bound and a very narrow band at that. How does one position themselves this morning?
I think, I have observed that this is a very, common phenomena that the week before the expiry and as we approach the end of the week, we do go in a certain kind of undecisive mode, It's towards the expiry week that once we have done with the Monday and Tuesday of the expiry week, that the market kind of picks up momentum and in certain cases some kind of direction. I think a very similar kind of movement is happening over here. Apart from the fact that we have an expiry next week, I think also is the fact that the markets have been unable to get past the strong supply points of 5150, 5180 on the upside, which we have time and again highlighted. But also is the fact that we are not seeing any kind of downside pressure. Having said this, that very clearly identified that the ongoing movement is of a range-bound movement. I think what is also important is that we should look at the intraday pattern of the Nifty and realize that there is a possibility of a negative price pattern developing over there. But that will be confirmed once the Nifty starts trading below 5100 to about 5085 on the spot. So one, I've kept a trigger of 5085 on the downside. If that level is being violated, I think possibly there could be some more correction to the up move which started from sub 4800 levels, and we might see levels of 4980, 4970 on the index. Or else I think the upside trigger will come only when we manage to trade above 5180. We did actually for a brief period of time on an intraday basis go beyond those levels I think on Monday, but clearly with the RBI policy kind of disappointing the market, we failed to get past those levels. So it's important that we capture that levels on a closing basis to sustain some kind of an uptrend. But otherwise next few days could still be choppy, still be volatile, and we could possibly be looking at this kind of a range bound movement happening over here. Also is the fact that this is kind of confirmed by both the key indices, which is the banking index as well as the CNX IT. I think on the upside we have seen CNX IT time and again fail to get past the 200 average or supply points of 61 to about 6200, which have been important weekly pivot points. Similarly, the bank Nifty after the RBI policy disappointment kind of corrected sharply, managed to hold on to the 200 average at lower levels at 9600, but we have not really seen a very strong bounce back building over there as well. So it looks like after a few days of hectic activity, I think the market is settling down. And while we don't have a directional bias in the sense that which way we'll break out, we don't have enough technical evidence to say that. I think the way to trade this kind of market could be very level specific, and you have to identify your trigger levels. So 5180 on the upside and 5085 on the downside is what I'm looking forward to.
So Mitesh, what would be your individual stock ideas in a market like this?
So actually that's the space which is very interesting. A lot of mid-cap stocks are giving good breakouts because the large caps have already moved up from sub 4800 levels. So I've identified a few of them. The first one being Syntex, which managed to get past the short-term averages, some positive crossovers over there. Can be bought with a stop below 58 for price targets of about 68 to 69 on the upside. The second one is Renuka Sugars. I think there was good activity in most of the sugar stocks yesterday. It was doing a range of about 28, 25 on the upside to about 26 half on the downside. Has managed to give a short upside breakout. Can be bought with a stop below 2770 for a price target of 30 half. The other one is India Cement, and I think the kind of reaction of most of the cement stock gave to the negative news, I think clearly suggests that there's a lot of buying momentum in over there. I think India Cement will possibly head towards targets of 92, 94 on the upside, and this one can be bought with a stop below 82.5. I've got two sell calls as well. The first one is DLF, which has really failed to participate in this up move. I think 191, 192 on the upside are proving to be a strong hurdle, and keeping a stop loss just above that, I would play for a downside target of 176 to about 175. And I've got a sell on Idea Cellular, but here I would wait for the stock to start trading below levels of 75. Once it does that, I think 70 could be the next logical target, and this one then can be shorted with a stop just above 77.
Okay, I just want to make a point here, and if I look at how markets or how news flow has moved from December to now, news flow is pathetic. We have a sub 6% print on GDP. We've got a threat. We've got a Fitch downgrade, a warning from S&P. Rupee has plunged to a new all-time low. Economic growth has been patchy, and no government reforms have taken place. In fact, the Reserve Bank of India policy has disappointed. But despite so much of negative news, Indian markets are still up about 12% from their December low. Mitesh, what do you make of this trend? The news is bad, environment is challenging, whatever could go wrong has gone wrong for us, but markets have not gone back to December lows.
Well, yes, I think when I look at the market from a slightly longer term perspective, it's very difficult to figure out a broader trend over here. I think what we are doing is basically 46 to about 4800 being, levels where in the last 1.5 years you've had multiple lows and the markets have clearly failed to get past those, break below those levels. While on the upside also we have not seen really any kind of larger uptrend sustain. Our idea is that if we cross 5180, 5200 in the near term, I think again on the upside we will possibly get stuck around the 5350 to about 5400 levels. So it looks like a broader 10-15% kind of consolidation, which on the monthly and the weekly charts the market is showing. And I am still not very clear as to which direction the markets will eventually break out from. And this could possibly be, because of the fact that you might have conflicting reports in the sense that you are growing, but the pace is slowing down. So there's some kind of conflict between the direction and the momentum.